traders. Got ourselves a pretty interesting market. You know, a couple of traders talking to me today about, you know, what's the trade? What's easy in the market right now? You know, what's moving? I mean, US dollar strong, but this is a second wave of US dollar strength. You had a little break at the end of last week, where you saw the US dollar give back a little bit of gains with the euro rallying here. Now you've got a couple more days of US dollar strength straight into the start of the new month, and the question you have to ask yourself is, what is going on here? You know, is this the start of something bigger? And you know, price action sort of indicating, yeah, perhaps this is right. You've seen reluctantly the dollar yen back above the 113 level for the fourth time in as many days. You know, that's unusual price action. Pretty bullish that you can muster a third or fourth time right now. But same as the euro breaking back below 117.20. You know, that's you know, if that happens, it's pretty hard to fight that now. But you have to ask yourself, with stocks so strong, you know, is euro yen, pound yen, dollar yen, are they going lower, or is it more likely to go higher? Now stocks are on a bit of a frenzy here, a little bit getting to the dangerous stage that you have to be aware that, you know, this sort of buying and one-way action is not normal, and it's already at the end, you know, on top of a slightly ridiculous rally anyway. So the market is ignoring bad news. So, you know, the tragedy yesterday in Las Vegas, not negative. The Catalan, you know, potential split and violence in Spanish, you know, back in the day, that's a huge story. Yet, you know, apart from Spanish stocks, global stocks globally went up. Right? It was focused more on optimism around PMIs, both in China and the US, that was super strong. But you're getting this little squeeze higher here in stocks after, you know, at a time when the market was thinking, you know, we've already overbought too much already. Is it time for the pullback that inevitably does come? You know, these are huge moves that the Dow's been doing here, and without a substantial pullback, well over 400 days without a 5% pullback, which is, you know, it's nearly unheard of. And so, you know, at some stage there is going to be a pullback, which does make me a little bit dubious about getting too crazy here on pound yen and euro yen on the pullback, because both of these are actually back near some buying levels. The level we talked about last week is 148 for the euro yen, pound yen, and for the euro yen we're nearly there. We're nearly there. 130.150 as good risk reward, and that's really just the next leg lower in both the majors here. So 116 on the euro, and you know, pound's struggling. You know, the market's really taking out the cleaver here. It's almost like the game everyone dies, right? Because every stop is getting taken out. There's nothing safe. This is a pretty big pullback. Gold as well. You know, traders generally hold on to losses rather than they hold on to profits, right? So most of my you know, talking with traders at the moment is, oh, I'm long gold, I don't know what to do. And it's hard to say. You know, this is you buy gold when there's risk off, or you expect there to be some negative news, maybe North Korea, or maybe some stock market correction. But it's, at the moment, global yields are rising, stocks are so strong, that's a terrible environment for gold, and the price action is pretty bearish. So it can keep falling, and you know, it can keep falling. You know, it can go to 1200. You know, that's just, it's not like that's crazy world. That's literally, if something doesn't give, you're in a little bit of trouble there with gold. The VIX, which is another product which people buy when they expect the volatility to increase, is at all-time lows now, right? It's literally at all-time lows, and the market is never seen anything like it. Like, they don't know how to respond in that environment apart from keep on buying risk, which I suggest at some point is becoming a more dangerous trade. But if you put the gun to the head, you have to continue to keep buying while the market is buying. You can't stop. So even though dollar yen is unconvincing, the moves above 113 in previous couple of days, you still have to be more bullish than bearish, given the yields have increased so much and the US dollar has so much potential here, and stocks are so strong that, you know, it's almost forcing dollar yen up. But it is a little bit dangerous here. So there is no clean trade. I've been thinking about what to trade for a while. I'm short Euro Aussie. That doesn't really strike me as too safe a trade anymore. It's been reversed a little bit after the RBA, mainly on the Aussie testing 78. Aussie stabilized a little bit at this level, but you know, there's no catalyst here to get the Aussie to turn around unless there's a broad US dollar sell-off. Okay, which can happen. The Euro's price action going into Europe was a little bit bullish, and the pound stabilized a little, even though we've had some pretty bad data in the last couple hours. So you know, it can happen, but it's, you know, I wouldn't be banking on that as a reason to be in a trade. And to me, it's best to sit on the sidelines until you get a new story that develops that you can sort of see playing out for a couple hundred pips at least. So you know, what's the story that's fighting the euro and the pound sell-off? Well, you got the Bank of England most likely raising rates. That counters the, you know, at some stage that makes selling pound a little dangerous, because if the market turns to that as a story rather than to the Brexit negotiations, then that's what provided all the support for the big rally. And you know, we've had a relatively large pullback already, so you're getting into trouble if you keep selling. Well, you could get into trouble. And the euro, at any point, we could be going, the market could turn to the next big event, which is the ECB meeting at the end of this month, and that's likely to be a positive event for the euro, given the subject is the tapering plan. So although the ECB can talk down the euro has already stalled and had a pullback. So you're getting to the stages here where the next 100 points is not an area I want to be short. Same here with the pound, I don't want to be short here. And dollar yen has only got 100 points until we get to the pips, until we get to the 114 level, which has been solid resistance in the past. Yeah. So you've really got yourself a scenario here, and the Aussie dollar. I mean, if you're selling under 78, you're asking to be crushed, because that 77.50 level is just, well, I mean, pretty much every trader wants to buy off that level if this price action is right. So you know, it's just, you're getting too close to these levels to be trading safely, and that's where the danger comes in. So be a little bit cautious. You know, it's a big week of data. It's a big, you know, NFP is always a big week, but you don't want to get caught in a US dollar sell-off. Either from a weak NFP, which is expected to be very weak given the cyclone impact. I think the forecast is only at 100,000 this month, and it's probably going to be fairly wild around that number, right? It could be anything, given that it's pretty hard to predict how major cyclones, and they had 2 of them, are going to affect the numbers. And so they do expect it to be negative, but by how much is the question. Yeah, so this is one of the markets where you've got to be a little bit cautious. I'm probably going to close out my Euro Aussie just because, yeah, like I didn't want it back above 150. It's not, it's just not what I was looking for, and it's pretty choppy. Euro Aussie, oh my God, is it hard? It's hard to play at all unless you're playing the extremes at the moment. It's this doesn't look exactly that bearish, right? So just looking at the chart, the trade was mainly around the idea that Chinese PMIs was going to support the Aussie, and that the Catalan issue will get worse. The Catalan issue is probably going to fade, right? I mean, if there was going to be a civil war or an uprising, it probably would have happened over the weekend or by now. You know, the fact that it's dying down and there's protests, and the central government was so heavy-handed, you know, probably nipped it in the bud effectively. But it's, you know, it could rise up, I suppose, could come back as a story. But if the market's not thinking it's going to be a big story yet either, so you can't play it yet, right? You can't play the euro short because of it, because you know, there's no follow-through selling in the euro so far, and there's particularly the Spanish bonds aren't going, you know, crazy. It's not like Brexit, right? It's not like Cyprus. The bonds aren't falling off a cliff. So that stabilization probably means that you have to avoid trading that as a story for the time being. And this is like the most well-behaved rally I've seen in a long time on the dollar CAD. Just every dip has been bought, so it's pretty hard at the moment. And oil's giving back some of its gains as well. It's pretty hard to be selling dollar CAD at the moment, because every time we've tried, you've seen that every dip has been bought back up. So it's not going to it's not getting out of control, the counter trend move here, but it's 125 was the selling level. If you look back, both times above 125, we did come back down. Now we're back above it for the third time. It's just hard to have faith there that the market's going to go down. So the US dollar range trading thesis, right? The thesis that the euro is going to go down to 116 or 117 and then back up to 120. Dollar yen's going to trade between 114 and say 112, 111. Aussie dollar between 78 and 80. That thesis is being tested right now. So we have to see some stabilization and a little bit more US dollar selling in the next couple of days to really make that a little bit more the trade that we're going to be playing, which would be euro and Aussie buying from these sort of levels. And it's definitely not something I want to get you guys to do just yet, because US dollar has been surprisingly resilient and showing signs of follow through strength. Yeah, so it's especially US yields. US yields are really they're starting to get dangerous again. So let's have a look here. So it's well above the 2.3 level, and it's just got that relentless bit of feel about it. And now we can start to focus on some of those other previous highs. If we get back towards that 2.5 level, then there's an argument to be made that dollar yen will be breaking 114, and perhaps short term the euro breaking 116 in that sort of environment, depending if the euro bonds start to rally as well, the yields, German yields. But we will have to wait for that to happen. There is some talk that is going to happen too, but still, the difference, what's important is the spread between US and German bonds. So the bond spread, so you say the US yields go to 2.5, but German yields only increase 0.1, then the spread is actually increased further in the US yields favor by slight amount, so that should actually support the US dollar. But in that environment, the one central bank which had, the place where you are seeing yields increase is Japan. So that would be another scenario where the euro yen and dollar yen ganged up on the yen, and both would shoot higher. So that's that's how we can get into those trades. So the euro yen pound yen story is probably the one we all should be looking at as potential buys areas at some point here. Why stocks are strong, you can't be selling pound yen and euro yen too aggressively. We just have to wait and get those nice levels, because the next move could be, like we talked about last week, another 1,000 points higher on both pairs. But in particular, the pound yen has a lot of room to the top side. Not even fussed. You can get to 163 this year. All right, let's have a look at some of the research out there from the banks. That was a bit of a big rant to start the day. I haven't had a big rant for a while, so I just wanted to get it out of my system. RBA, nothing really to read there. Little bit of jaw boning. Nothing changed really in terms of their last attempts. But it looks like that the pound construction PMI dropped underneath 50. But definitely not what you want to see if you were bullish on the pound buying this dip. It's going to keep you a little bit more, going to keep you awake at night. Alright, we'll make sure we haven't missed anything here in the macro update. There were some slight downgrades given by the New Zealand government there for the growth. I was looking at Aussie Kiwi actually down at these levels. This one is not a bad trade. This is a trade that to me makes a lot of sense. It's something you can sort of sit on. The market's found a bit of support at some previous resistance area, and you know, both are pretty much going to move in unison, the Aussie and the Kiwi. It's just the political uncertainty in New Zealand and just where it's sitting. If the market wants to really focus on yields around the world, probably the New Zealand dollar is going to get the most left behind. So I don't mind this trade. I mean, it's not the highest conviction trade in the world, but I suspect that the new trading range will be, you know, well above and back above 110. But you know, we've been trading Aussie Kiwi on and off for the last couple of years in the stream. Most of the time we're just buying dips. That's the default view, so keep that in mind. Could be a little bit of bias there. So basically what we're talking about here is you know, that US dollar sell-off was so aggressive all year in the dollar index that the potential for bigger than expected rebounds in the US dollar, especially against pairs where the story has sort of died, like the Aussie, like the CAD, like the Kiwi, with the lack of follow through in the commodity rally that helped the Aussie so much, and the Bank of Canada backing off, then yeah, you could see the yield play story come back in, which is that, you know, European Euro Aussie Euro CAD buying sort of story, and Aussie US selling and dollar CAD buying. I mean, it has a higher chance of happening now than it did when, you know, it was basically everything against the US dollar, which it had been for the last little bit. Regards to that Catalan independence referendum. Alright, so the Spanish Constitutional Court deemed it illegal anyway before it started. So unilateral independence would be the most dangerous, I suspect. And yeah, I reckon they'll just leverage it up to get a little bit more autonomy. This would be, yeah, I mean, look, if they start putting political leaders in jail, there could be a bit of issues. And this would be very negative for the euro if they had a whole Spanish election on it. Alright, so but it seems like it's a very slow moving story at the moment, right? It's not really developing at the pace which you can use as a forex trader to get involved in. So the next big thing is whether they declare independence or not. Looks like they haven't yet, and so we're going to have to wait for that sort of decision making process, and then the response from Spain. Alright, so what they mean here is just calling regional elections first. And if they don't follow through and declare independence, then it will have to, call elections anyway as well. Okay, so there's going to be elections in Catalan probably. This is interesting. So the offshore tax is a big part of the US dollar rally, right? So the 2.6 trillion is offshore. They want them to bring it back in and only pay a smaller tax than, so get a tax holiday on it. If it gets to 10%, then that's a little bit more attractive than 15% compared to proposed effective tax rates at the moment around 20-25. And Moody's has said that the current tax plan is likely credit negative. Yeah. Alright. VIX has remained below 10, fourth day consecutive day, is now getting closer to all-time lows. This to me seems very cheap, guys. This is something that I don't mind anyone buying at the moment. You really can't lose too much. You can lose, maximum like 1 point from here. Probably less is if the market keeps on going up, you'll lose 1 point. But if there's a sharp fall here, you'll make 3 to 4 points very, very quickly. So the risk reward is still very strong in the VIX, even more so than when we first talked about it a couple of weeks ago. This is, it seems to me that at some point, you might be holding it for a little while, you might be holding it for 2 months, but at some point there has to be some volatility come back in. I mean, it doesn't have to be, but there's a very high chance that there will be this year some volatility. Yeah, and so that manufacturing ISM went back above 60. That's pretty big. That's pretty big. So that would really, I mean, that's why the stocks took it on to be going up again. But it's just the fact that we are so high in the stocks that I'm a little worried. And you know, at some point it comes a little too thin to breathe up there, and creates the potential for bigger falls. S&P as well. S&P's, you know, well above the targets for the year already. Something like 14% up. The Dow so far. S&P, sorry. So yeah, I'm going to be sitting on the sidelines a little bit until we get a little bit more clarification on the US dollar moves here. I'm not happy to be buying the dollar yen at this level. I'm not happy to be selling the euro or the pound at these levels. But the buying side, so the buying of the euro and the buying of the pound, hasn't worked out yesterday and last week, and so there's no harm in waiting for nice price action to develop. So a little bit of buying price action. This is actually pretty good. You know, the fact that we went back below that 107.20 level, tested 117, then came back in the European session. You know, this is flipped from being very negative to, ooh, okay, this is actually turning quite. This is changing its tune pretty quickly here. So this is not, you know, don't read too much into. You can be very nimble in your view, because this is only in the Asian session today that I was like, oh, the euro's going to go to 116. Okay, but the fact it's done what it's doing here, it does open the door here to the euro stabilizing above the 117 level, and you have to be open to that idea. So if you're a buyer, you don't just sit there and say, oh, I'm going to buy at 116, 20, the high from 2016, when it goes back and tests it. That high, we have to change our we have to bring forward our buy level, or just the timeline to buy if the price action changes, because the US dollar is priced in the Fed rate hike pretty well, and sort of if you're playing that the ECB story is going to be positive this month, you do have to at some point pull the trigger here. Could be laughing and said I could have got that 117 levels back in the day. I was too scared to buy. Alright guys, best of luck with your trades. If you want me to look at particular pairs, come through and just send me a little PM, and we'll try to focus on some of those pairs there. Pretty much every pair is interesting to me anyway right now, so every major anyway, so the crosses must be obviously showing a little bit of technical differentiation too. So where there's a lot of volatility like we're seeing is those Euro CAD and Pound CAD sort of trades, and there are ways in which those can go back into selling again, but I think the focus is more to the top side than the downside. And we're doing NFP live on Friday, so that should be fun. Given that the number's supposed to be extremely volatile, that could lead to a little bit more movement given the US dollar is so weak, and potentially for the first time in probably 5 months we're going to have big volatility, which would be great. But we'll talk more about the market's expectations as we get closer, and where the US dollar is sitting as we get closer as well. Because if the US dollar is super strong, then yeah, it becomes much more likely that we look towards the counter trend trade. Alright guys, best of luck. We'll be back tomorrow.